Hey everyone, and welcome back to another portfolio update. So, over the past week, the Couch Investing portfolio was down 0.71%, whereas the S&P was down 0.45%. Year to date, we are still doing fine. We're up 6.6%, whereas the S&P is up 1.86%. As for the start of the journey, we're still up 70%, whereas the S&P 500 is up 20.18%. Of course, last week I already showed you the couple of moves that I've made in the portfolio. In this video, I'll discuss the upcoming moves as well and a couple of other things, company related things that I own here in the portfolio. First up, we've got actually some bullish momentum, some positive momentum. This is what has happened with the S&P 500 after the AAII Bulls Bears went over 3% for the first time in over 15 weeks. As you can see, the odds are extremely in our favor. A week later, 2 weeks later, a month, 2 months, 3 months, 6 months, 9 months, a year later. This is very, very bullish for the continuation of this bull market. Now, of course, you might say this is quite strange because we just had a very, very big bull market, right? Well, yes, we had 2023, we had 2024, we had the start of 2025, and then a month or two, let's call it, of a correction followed by a V-shaped recovery, which means we are back where we were not so long ago. Now, that doesn't mean that we cannot continue. As I keep saying time and time again, remember, we are yet to cut rates significantly. And the longer we can stretch that rate cutting cycle, the longer you can stretch a bull market. Now, of course, there are plenty of other things that can ruin the bull market, right? Conflicts, no rate cuts, recession, higher inflation, stagflation. So plenty of things to take into consideration. This is not set in stone, right? As we've seen before, we've had 100% of times previously where we went up and then suddenly we went down. So just because I'm showing you this data, it gives us a picture, gives us something to work with, but that doesn't mean that it's going to happen 100% again, just so we're clear. Then I'd like to go over here a couple of points from a bar chart. So how to spot the winners and avoid the fakes. So they put here a couple of points. First up, check free cash flow growth and margin trends. Revenue growth is easy to find. Profitable growth, not so much. Look for businesses expanding free cash flow faster than revenue and improving margins while they do it. Real value creation occurs there. This is why I always point out, okay, we have revenue growth of, let's say, 10%. But then, actually interesting, free cash flow is actually expected to grow 12%, 13%. EPS is expected to grow also faster than revenue. That's when things get a little bit interesting, and that's things that I show you in each and every video, especially very easy to follow when I show you this on FinChat. Then, point number 2, look for modes, not just story. And this is very, very important. And I have to balance it out here. So a story can move stocks. A moat keeps it there. Ask the question, what stops competitors from eating their lunch? Is it a brand, scale, tech, distribution, or switching cost? If there is no moat, don't pay up. But I'll have to add this. Just because there is no moat does not mean it cannot be a good investment. I know it sounds crazy, right? I know it sounds crazy because I see the comments. I can see all the comments. And I can say with absolute certainty that a lot of times, yes, we talk about companies that do not necessarily have moats, right? A huge competitive advantage. No, but that doesn't mean that it cannot be a good investment. A company with no moat, but just a good company can be trading at very, very good prices. And just for that reason, it makes it a compelling investment. Now, that doesn't mean that you should own it for the next 10, 20, 30 years or so. No. Okay, we don't know what can happen 10, 20 years, for sure. But over the next year, over the next 2 years, 3 years, yes, I still think that companies with no moat or no particular strong moat can still be good investments. But, and I'll finish with that topic, those types of companies are not companies where you can put them in those coffee can type of portfolio, right? The types of companies that you pick, you put somewhere and you don't touch them for the next 10, 20 years. Those, okay, I'll agree. Those, I think it would be better for you to choose ones that have big competitive advantages, right? That have the brand recognition, the scale, the tech, the distribution, high switching cost, and all of that. Moving on to the last two. One, use valuation in context. This is very, very important. A 35x stock might be cheap if it's growing at 30% annually with a long runway. Does a 10x stock exhibit stagnant growth and lack a driving force? That's dead money. Multiples only matter if the business keeps earning them, right? I've seen this also time and time again. You've seen that probably as well, right? Oh, this company is trading at 35 times earnings, right? Or maybe 40 times earnings. It's super, super expensive. I don't want to touch it. Well, you can probably look at 100 names, right? 100 names in the last 10 years probably, where companies with a PE of, let's say, 50 or 40 or even more have crushed the market. Now you might say, yeah, but that's because there was a bubble for so long. Maybe, but most of these companies have one thing in common. Most of these companies are probably high quality companies that kept on growing time and time again, much, much faster than the market, and they grew into that valuation, right? You paid the premium because it made sense. You paid the premium because it was a very good business that was growing extremely quickly, became more and more profitable, and now the multiple is actually coming down, and so your investment is making sense. Of course, there are some companies where the multiple looks extremely cheap, but it is cheap for a reason. It might be cheap because, well, growth is decelerating. It might be cheap because margins are coming down. It might be cheap because the company is just not good anymore. So just looking at those pricing metrics, right? Just looking at those multiples does not always tell you the full story. And then the last one, which deserves to be the last point here, track insider confidence. Are insiders buying, holding, selling? The strong conviction amongst insiders at elevated prices is significant. It means they believe this thing has legs. You know, right, when we hear about insider selling, plenty of headlines, right? Oh, insider sold, so you must sell as well. But no, insiders sell for many reasons. They usually only buy for just one. With that said, we can go back to the portfolio. So over the past week, I have not done anything other than add my, well, necessary extra share of NVIDIA because we covered an NVIDIA event. So now I have 2 shares of NVIDIA, and overall that position is still up 8.7%, believe it or not. I actually was surprised that Owlet went up so much. I'm now up only. I'm up 66.5% on that position, but that position is not even 1% of the portfolio. I believe a private equity firm took a huge stake in that company. So yeah, I'm keeping that right there. Small position. I still have Celsius and I still have Appcelera as well. And yes, I still have that 1 share of Palantir that is also up 11.4%. But focusing here at the top because that's more important. Still, SoFi, PayPal, Alphabet, number 1, 2, and 3 of the portfolio. Then we have Micron. Micron has been making its way up to now $115. Of course, Micron will report earnings, I believe, around 10 days from today, maybe a little bit less. Then we've got Uber. I do want to touch on Uber later in this video, especially as we approach that Tesla robotaxi launch and everybody thinking that, oh, Tesla is going to kill Uber because XYZ. We're going to talk about that. Still pretty happy with my position there, and especially the performance, because this is basically a year-to-date performance, which I'm up 30%. Then we've got Rocket Lab. I'm actually very happy of the performance, but I'm also very happy to see that Rocket Lab stock has come down because those are one of the names that I do want to add. So Rocket Lab, I do want to add closer to $20. Nebius, I'd like to add under 40. I think I'll be a big buyer under 40. So if you're asking me for specific price target that I'm waiting for, Rocket Lab, it's probably closer to the 20s. If it comes below, then great, but I'll probably already buy more shares when it comes closer to $20, 21, 22. And then Nebius, I know I'd said previously I would love it under 30. Okay, that didn't happen. Low 30s, I'd love it. I think once it goes under 40s, I will start accumulating more shares of Nebius. As for Alibaba, I like my position in Alibaba at the moment. I did add not so long ago, so I'm quite happy with that. AMD, if we go back under 110, maybe closer to 100, if that happens, but probably 110, I'll start adding even more shares with AMD. I like my position, but I do think that it deserves a bit more, especially after the recent event that we just had. Pretty bullish event, even though the stock did not move much. Then Tesla, also happy with my position in this portfolio, still up 73.5%. Now talking about Tesla, I didn't make a Tesla weekly video, so here are the numbers. So the Tesla weekly insured number for the past week in China was 8,637. So a stark drop week after week, and also year on year, that's quite lower. And right now in Q2, we're at 80,267 vehicles. That is, of course, lower than the 102,887 vehicles we had this time last year. As for the numbers from the select European countries, so that's UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland, year to date, at this point, sales are still down 21.5%. But over the last couple of weeks, we have seen a nice little, very little rebound. So the number for the past week was 3,800. So quite a nice increase, especially from the low, what was it, 2,100 from 2 weeks ago. So definitely some momentum there. Not much, but some. Moving back to the portfolio, of course, the top three here make up close to, 30% of the portfolio. Alphabet, as I say during the live stream time and time again, if we somehow go back to the 150s, I'll of course have to buy more. With SoFi, same thing, anything closer to $10, I'll pick more shares. And PayPal, maybe if we go back into the low 60s, mid 60s, I'll probably buy even more. Now going back here, Intel currently, I'm not willing to add more, although the smart thing would probably be to buy more at $20. But currently I am waiting for Intel, right? For Intel, I think my timing was not that great. I'm down 18.3%. I admit that the timing was not great. It is taking a bit longer than expected. And so now I am willing to wait until I hear more about 18A, maybe new customers as well. And then I don't mind if the stock goes up. Remember, I already have a position, which means my position will become better, and then I'll be more confident to add more to that position. And if this year I hear nothing positive, nothing about 18A positive, or nothing about maybe new customers for Foundry, then probably it might be time to cut that position. Then as for Meta, it's only 5.6% of the portfolio, but I'm still quite happy with that because in my core portfolio, Meta is, now number 2 of the portfolio. So I'm happy with that. Another position that I will probably already be adding more on Monday, anything under $10 here, I think to me is a no-brainer. And that's the local, a company worth less than $3 billion, growing extremely quickly, profitable and close to zero debt, growing in a growing market, in their growing total addressable market or serviceable market. The local, in my opinion, is a no-brainer under $10. I do expect this to be a multi-bagger in the future. Then, of course, I have my cash position and the smaller positions in the portfolio. So that's basically the way that I'm thinking right now. Of course, it depends what happens with the market. Oil prices can go up, which might impact inflation in the upcoming readings. And so the market might anticipate that, and we might go even lower. Might be, right? We might see a little pullback. We've seen a small one on Friday. As you can see, the portfolio was down 2.8% on Friday. So remains to be seen. The thing here is that I came prepared. Of course, I'd love to have more cash, but as you know, my message was pretty clear, is increase the cash position over the last couple of weeks. So I have now 3.3% cash in the portfolio. Remember, I started the year closer to 14% cash. Then at the end of April, that was closer to 0%. And now we're back over 3%. So in anticipation, I'll be opportunistic here. Whether it's going to be for swing trades or longer trades remains to be seen. But so far, it has been purely to increase existing positions. Moving on to some company-specific news. So one, we have here a post by the CEO of Wave. So big news. Wave AI is partnering with Uber to launch the first ever public road trials of level 4 fully driverless vehicles in London. London is our home and one of the most diverse cities where I can't wait to bring the benefits of autonomy. So here again, Uber making moves in the AV market. That's why I still believe that Uber will be a huge winner in the future, because it will be that partner and that platform where all of these players will list their fleets on. We also had a list here of I think the companies that got permits or got an update on their permits, or where the company's stage is at. So this is for Austin, AV Ride phase testing, AV Ride part of Nebius. We've got Waymo deployed already. We've got Tesla testing, and we've got Zoox part of Amazon testing as well. We also had this right here, Uber to acquire Taiwan's Crown Taxi pending approval. Uber has announced it will acquire Taiwan's Crown Taxi to provide more diverse options for customers. Acquisition is subject to approval by relevant authorities. Crown Taxi was established in 2011 and has been working with Uber since 2017. Interesting move. So this is from the betting market Kalshi. So best AI this month, in the month of June, we can see that Gemini is at 92%. Back in May, we've had here for Polymarket, same thing, Google at 95.8%. So yeah, we are definitely talking about a different Google, a different giant in this AI race compared to a year or a year and a half ago. One extra thing here, right? Another company or another asset that Google Alphabet owns is Android. So here we have the operating system market share worldwide. Android sits at 46.14%. Then we've got Windows, iOS, OS X, and then the others here. And as you can see, Android has actually been increasing market share recently. Another great asset that Google owns, right? Because imagine if you have the operating system of phones, tablets, AR, VR devices, infotainment, you name it, TVs. Quite a good asset to have, I'd say. So yeah, if the market wants to continue to doubt Google just because search is under pressure, although as I've shown you time and time again, you've probably seen it as well. Plenty of people still use Google search. Search and advertising still goes up and to the right, maybe not as fast as before, but yeah, it's still doing quite well. Gemini is very popular right now. So yeah, plus you've got Google Cloud, which I think can be worth hundreds of billions of dollars in the future, high margin business. And if we do get hit, right, search advertising wise, I think that the growth in Google Cloud will just compensate for that. So yeah, of course I'm biased since I own it, but I did show you time and time again why I think some people are just wrong and why I believe I'll be right in the future. So all in all, that's all I've got for you right now. That's basically my game plan for the next couple of days, maybe even next couple of weeks. There are some interesting companies that I will cover over the next couple of days. Some companies that I think that are extremely well under the radar and even undervalued that might 2-3x in the coming years. So stay tuned for that. Those companies have never been covered on this channel before. So stay tuned for that. If you've got any other ideas, do let me know down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.